Hi, Keith Cawthorell here at the law firm of Keith Cawthorell, Houston Tax Attorney on Instagram. Today we are going to talk about the tax treatment for family members working together in the business. If spouses carry on a business together and share in the profits and losses, they may be partners whether or not they have a formal partnership agreement. If this is the case, then they should report their income or loss from the business on a Form 1065 partnership return. They should not report it on a 1040 or a Schedule C. Switching to qualified joint ventures, what is that? Well, that's something you might be able to do. This is for members who are spouses, a married couple, filing a joint return. They're materially participating in the business. Both spouses are electing not to be treated as partnerships, or as a partnership rather. Only the business owned and operated by these particular spouses, and it's not somebody who would have like an LP or an LLP. If you're registered underneath that, it doesn't work. Spouses who are qualified for this particular qualified joint venture, each files their own Schedule C. They don't need an EIN, and they're all treated as sole proprietors. If the business has employees, either of these spouses or as a sole proprietor can report that employee for the employment tax purposes. If one spouse is employed by another, the wages are going to be subject to income tax withholding, Social Security, Medicare, but not the Federal Unemployment Tax Act, which is the FUTA. If the child is employed by the parents of the business rather, payments for their services, if they're under the age of 18, are not subject to Social Security tax or Medicare tax. Parents who are employed by their child in this family business, they are subject to the Social Security and Medicare tax and income withholding. They are not subject to the FUTA Act tax, the Federal Unemployment Tax Act. So we have the partnership and the qualified business venture. And so there is a distinction between those two things. If you treat yourself as a partnership, you're going to have to file it as a Form 1065. If you are electing to be a qualified joint business venture, then you are a Schedule C filer, and you file on a 1040, and you follow all the other rules that we talked about. So if you have any questions, let me know. I know I said that a little fast. Thank you, and have a good day.